Top of the morning. Welcome everybody to Cheef and Sharp. Brought to you by Rapid Dough, the home of money conversations and solutions. Oh man, I'm your host Don Bucks. This is your first time tapping in. We are going to be talking about options trading. So if that is something that you're into, please break out your notepad. We're going to gain some confidence in options trading today. Quick disclaimer, this is not financial advice. This is for educational purposes only. Dig. So we're going to be talking about ideology behind plays, what a high probability play is, and I'll go over that pretty much every day. One trade I take, and this one trade I look for, and that's it. And I do it over and over again. Trading is boring. You know what I mean? So anybody looking for excitement, you're in the wrong field. Unless you get excitement out of watching your account run up. Because that's what we're looking to do over here. So that's the excitement we're looking for. So with that being said, we look at the SPY to start the day off. See what the SPY is doing. By the way of Cheef and jealousy this morning. Cheef and jealousy. Yeah, so we're looking at the daily on the SPY. The SPY represents the overall market. We don't use a lot of indicators. We only use the MACD and the Bollinger Bands. And of course, we draw our levels indicated by these these green areas here. Those are our levels, support and resistance, the levels. And we know each time frame has different levels. These are daily levels here. All right. So according to what we see here, on the MACD, we're above the zero line, which is positive, indicated by the arrow. Right here. We're positive, but the blue line is crossing below the orange. Even we're above the zero line, so we're positive, so we're not going down. We're going to be basically trading sideways on a level. That's what that indicates. Not going up or down. It's not going to try to trade sideways in a range. So today, it looks like we're going to be trading in where we were at yesterday because we went down a little bit. But it stopped at a level. It stopped at a level. And now it's bouncing. So we're up this morning and your stocks probably are bouncing as well. So we're in, that's why we look at the SPY to give us overall synopsis of what's going on in the overall market in our individual stocks. SPY represents 500 of the top companies in the market in all the 11 sectors. So we get a pretty good gauge of what the overall market is doing, what individual stocks are doing. I'll look at the SPY. So we drop it down. No, let me. We're in PayPal, P1. We got a nice expiration date on this. So look at the bouncing on. Looks similar, right? It's bouncing. So it's bouncing off of a level after it came down yesterday. Just like the SPY did. MACD is slightly crossing, just like the SPY is, right? Yeah. Bouncing off of this level. Right. Stop it right here. We're bouncing off of the level. So yeah, that's what this indicates. This turning down of the blue under the orange means we're going to be trading sideways in a range until this blue line crosses back above. So we don't have a bounce here today on PayPal. Also in this one as well. Slight bounce as well. Oops. But look at our MACD on this one. It's above the orange. This here is a momentum divergence. What this symbolizes. That is our high probability trade. And I got in it because actually yesterday. Let's see what I got next. I got in on a momentum divergence, whether it was yesterday or the day before. They both showing a sign. So I'm taking this to the next level up, which is 18. But I have a nice expiration date on it, so I can hold it a little bit longer. But it's going to be leery of that next level up and your expiration date. So if you don't have a long expiration date, you can't wait through the slight pullback once it gets to the next level. Once it gets to the next level, it's going to pull back a tad before it goes to the next level after that. So if your expiration date ain't long enough to withstand that slight pullback once it gets here, I would take profit when it gets here. So we got that CLF on the 25th, so Tuesday. So I got it on this bar here, but you can't see the red bar in this green. So let's drop down. So I got it Tuesday, it was one of these. I think it was this one. I got him and it went against me. So now it's coming back up. We got 3 minutes till open. 3 minutes till open. This is where I look for my plays. Shit, especially good to spot as market opens. Shit. If y'all not following me on Instagram, make sure y'all follow me on Instagram at Rappindough, RAPPIN_DOUGH. Check out my newest reel from when I was in Sacramento. Because I was sitting up in the hotel, and you can't go to Cali and not hit the dispensaries. You feel me? So I'm sitting there like, yo, where's the dispensaries? Google dispensaries near me. And why was Cookies 0.4 miles away? The famous Cookies dispensary, 0.4 miles away. I said, nigga, walk here. So you get a chance to see a little bit of footage when I was up in there. And I hit the spot called Nubs as well. So I hit a couple of jobs. I was out Cali having it. You feel me? I was out there having it. And yeah, I was trying to be able to come back and cheat some of the Cali shit I had, but that's good. It's gone. It's gone. I got back. So I think I was chiefing, not think, I know I was chiefing a strain called Beach Break, called Oak Lotto. Both of them was fire. Taste wise. So I went in there, I was looking for hybrids, 50-50s, 50% sativa, 50% indica. So we trying to be all sleepy, like you know, the indica's putting you down. Sativa had you all like drunk some coffee. I don't want you to feel like that either. So, all right, so the market is open, y'all. The market is open. Let's see how we come. So we opened up, right? We opened up this morning above this level. Let's see what happens. It's a bounce off this level. Continue to move. Shall see. It's a bounce. Looks like it. Looks like this wants to curve up, right? So I like to look for this histogram part getting smaller. As this goes up the arch. Let's see what we have here, y'all. We need this max D to turn up. We need this max D to be above the arch. Let's see any further upside. If not, we're going to trade sideways on top of this level here until this crosses up. The way to withstand this stuff here is to have the proper lift on your expiration date. That's why I encourage short expiration dates, because especially if you're looking at a situation like this, the MACD curve down above the zero line. It's like, all right, now we gotta wait. If you ain't got no time on your expiration date, short expiration date, that's not gonna work. Pays to have time. Expiration date. All right, I get my tea together over here. I think I was thinking too, y'all. Pretty sure y'all was thinking the same shit as an adult. All right. From an adult, and you realize, man, my parents wasn't as smart as I thought they was. Nah, for real, like, you get to adulthood, you be like, yeah, they really wasn't that smart. I mean, as a kid, he's smarter than you, of course, but you realize when you can become an adult, it's like, yeah. Then you interact with them as an adult. They smart, but they not as smart as you thought they was. You know what I'm saying? That makes any sense. because now the shoe is on the other foot. I'm pretty sure y'all find yourselves, but you tapped into rapid W, you on a whole nother level. So I'm pretty sure a lot of y'all found yourselves in a position where you teaching a parent now some shit that you thought they knew already or should have known. It's crazy. I was just thinking. Oh, so another thing I was having a conversation about was having a conversation about the freedom price. Somebody was asking me, they trying to retire, and he was asking me about the freedom price. But he's actually asking me about some money somewhere. So yeah, 5,000, essentially getting $250 in 6 months. That's it. 5 grand, $250 in 6 months. Way better than that. I said in the beginning, it's not financial advice, but you can do way better than getting $200 in 6 months off 5 grand. Down. We have some downwards. Let's see if this level maintains. It doesn't hold. It's coming down. 452. That level gonna hold where it's at. It's coming back down to 452. Let's see. Ain't going far down because MACD where it's at. MACD is above 0. So not going down. It's not going up. It's going down. It's going to trade in a range. Remember I said in a range. See right here. This range was 443 and down right here. The range it was trading was 437 and 430. Trading here before it closed back up. So down, it was here. Up, it broke. Remember, when it crosses down, the blue line crosses down, it trades in a range. So that means it's not necessarily going up or down. Consolidation. So here we have it again. Down. Range until it crosses. think there's anywhere else I can add to that, but for the simple fact that we're going to be trading in a range until this goes back up. Let's look at MACD is where it needs to be. We got in it here. No, we got in it back here somewhere. This one. We're above this level. Now we're sitting on it, testing it. Testing the level we just broke. Next level up is time on this contract, and we just get it. So yeah, probably looking good. Back. So bye-bye. We're taking that to 103-ish. Let's take a look at. Let's take a look at target. I'm going to target till January. Not necessarily until January, but we got long expiration on this chart. Look, it's almost above the zero line. We got in this joint. Back here somewhere. So it's been consolidating and cooking like a rubber band. The longer you see this, the more powerful it's going to take off when it takes off. So look, it's been creeping towards the zero line for some months. And now it's undervalued like a mug. Yo, target used to be like almost $200. Actually, it was more than look. 260, $270 a share back in 2021. Dig me? And it's 130 right now. So this is due because Target is still a dope store. No matter if they started selling gay shit or transsexual stuff or whatever, like they still gonna be Target. So above this level, see the level we're above this level. So now we're at the next level. Like short-term level is 138. Once it breaks 138, it's already at 136. It's going to go 150. So We're here for it. What else we in? Nike, I think it's looking the same. It's undervalued. Now it's creeping towards the zero line. Hella undervalued, and it's been creeping there. Look, since back here, it's been super undervalued. So it's been creeping since June. It's been creeping. It's been down here for a while. And lower, it looks like. So it's been creeping. So once it buzz past 14, 18, 30. So for that too, until January. We won't get all of that because 108, how much was Nike before that? Look, Nike was 180. Shoot. And it's only 108 right now. Kidding me? I need all that. Get all that growth. Nike is a growth company. So they grow at least 25% a year. 25% of 108. All right, considering this is the bottom. So here was 25% of 108. All right, like 30 bucks, right? Almost. So add to this, your strike price could be 2 years out. You're only gonna hold it for a year, but 2 years out, 130 strike price. Okay. That's called a leap. Leap contract. Of course, those are expensive. A little bit more expensive, should I say. Let's look at it. Let's see if we want to do a leap. Nike. June 2025. John. At 130 strike price, it'd be about $1,000. Or you can do the 135. $1,000. But by the time that year is over, that 1,000 won't look like 3,000. You know what I'm saying? But this is not financial advice. I'm just telling you, this is a good leap opportunity here. Nike. But I'm gonna end it on that. If you haven't already, make sure you grab the free checklist out of my description of the channel. This sounded like Spanish. I try to make this shit sound as easy as possible, simple as possible. But to help you with that, feel free to grab my courses on sale. That's in the description of this channel as well. It's your man, Don Bucks. Get money with me. See y'all Monday.